What if a single number could decide whether your business in the UAE must register for VAT? That number is 375,000 dirhams. Cross it, and registering is no longer a choice. In the next few minutes, we'll break down the UAE VAT registration threshold for 2026, the mandatory limit, the voluntary limit, how the calculation actually works, and the exact steps to register on EmaraTax. No jargon, just what you need to stay compliant. First, the basics. VAT in the UAE is a 5% tax on most goods and services administered by the Federal Tax Authority. If your business makes taxable supplies, at some point you may be required to register, charge VAT, and file returns. The registration threshold is simply the level of taxable turnover that decides whether registering is mandatory, optional, or not yet allowed. Getting this number right protects you from penalties and from registering before you actually need to. Let's start with the mandatory threshold. A business must register for VAT if its taxable supplies and imports were more than 375,000 dirhams over the previous 12 months. This is not your calendar year profit. It's a rolling 12-month total of taxable turnover. There's also a forward-looking test. If you expect your taxable supplies to go over 375,000 dirhams within the next 30 days, registration becomes mandatory as well. Either test can trigger it. Once you cross that line, you are required to register. Below the mandatory line sits the voluntary threshold, 187,500 dirhams. If your taxable supplies, or even your taxable expenses, go above this amount, you can choose to register voluntarily, even though you are not required to. Why would a business do that? Voluntary registration can let you recover VAT on your costs, and it can signal scale and credibility to larger clients who expect to deal with VAT-registered suppliers. Below 187,500 dirhams, registration generally is not available yet. Now, a crucial detail. Both thresholds are based on taxable supplies, not just any income. Taxable supplies generally include your standard-rated sales at 5%, your zero-rated supplies, and imported goods and services that fall under VAT. This is exactly where many businesses miscalculate. They add up their total revenue instead of their taxable supplies, and then either register too early or miss the threshold completely. When in doubt, this is worth checking carefully. Let's make the calculation concrete. The rolling 12-month test does not reset in January. Each month, you look back at the previous 12 months of taxable supplies. So a business that grows steadily through the year can cross 375,000 dirhams in the middle of the year, not on the 1st of January. That is why tracking your rolling total every month matters. Watch both tests together, the previous 12 months and the next 30 days. Here's the full picture, side by side. Mandatory registration, 375,000 dirhams in taxable supplies. Required. Voluntary registration, 187,500 dirhams in taxable supplies or expenses. Optional. And below 187,500 dirhams, registration is not yet available. One threshold forces you in, the other invites you in. Knowing which one applies to you is the whole game. Let's walk through an example. Imagine a growing company in Dubai. We'll call it Bright Path Media. For most of the year, their taxable supplies sit comfortably below the limit. Then a few large contracts land. When they add up their taxable supplies over the previous 12 months, the rolling total crosses 375,000 dirhams. At that moment, Bright Path is required to register for VAT. Not next year. They need to act within the time frame set by the Federal Tax Authority. So how do you actually register? Registration is done online through EmaraTax, the Federal Tax Authority's digital platform. In simple terms, the process looks like this. Create or log into your EmaraTax account. Add your business and its details. Complete the VAT registration application, including your turnover figures and your supporting documents. Then submit it for review. Once it's approved, you receive your tax registration number, your TRN. From then on, you charge VAT, issue compliant tax invoices, and file your returns on time. Here's a simple 5-step action plan. 1. Calculate your taxable supplies over the last 12 months. 2. Check whether you have crossed 375,000 dirhams or expect to within the next 30 days. 3. If you're between the two thresholds, decide whether voluntary registration benefits you. 4. Gather your documents and register on EmaraTax. 5. Set up a system to stay compliant every month. Do these in order and VAT registration stops being stressful. Why does getting this right matter so much? Because VAT compliance is not a one-time event. Once you're registered, you are responsible for charging the correct VAT, keeping proper records, and filing accurate returns on time. Registering late or misjudging the threshold can expose your business to penalties and unnecessary stress. Registering thoughtfully and on time keeps you in control and keeps your business credible with clients and with the authorities. This is where the right support makes all the difference. OBG Outsourcing helps businesses understand their VAT position, calculate their taxable supplies correctly, register on EmaraTax, and stay compliant month after month. From checking whether you've crossed the threshold to preparing and filing your returns, the goal is simple: accurate, on-time VAT compliance, without the guesswork. If you are unsure whether your business needs to register, that is exactly the kind of question worth getting answered early. So, to recap, 375,000 dirhams is your mandatory line. 187,500 dirhams is your voluntary option. Track your taxable supplies over a rolling 12 months, keep an eye on the next 30 days, and register on EmaraTax when you need to. If this guide helped you, subscribe for more clear breakdowns of UAE tax and compliance. And to talk through your specific situation, reach out to OBG Outsourcing. One important note before you go: this video is general information only. VAT treatment depends on the specific facts, activities, and current UAE legislation. Obtain professional advice before acting. Thanks for watching.